Subscribe to my channel Report Stock.
Have you ever wondered how even the biggest, most established food companies stay relevant, especially when consumer tastes seem to shift like sand?
Yeah, it's a constant challenge.
It really is. So today we're taking a deep dive into Flowers Foods, Inc. You probably know them. They're the company behind brands like Wonder Bread, Nature's Own, and Dave's Killer Bread.
Mm-hmm. Big names.
Exactly. And our mission here is to, well, unpack their Q2 2025 earnings call. We want to look beyond just the headlines, understand their strategy, what's working, and maybe what challenges they're grappling with.
Right.
This isn't just about the financial numbers, though. It's actually a fascinating look at how a major player in, well, the bread aisle is trying to reinvent itself.
That's a good way to put it. And the core of this deep dive, really, is understanding Flowers Foods' pretty aggressive pivot in their product portfolio.
They're aggressive.
Definitely. It's a strategic overhaul, really, designed to align with what consumers want now, which, they expect will drive their long-term growth. We'll definitely look at the successes. But also, critically, the hurdles they're facing on that journey. It's not straightforward.
No, I bet not. So when we talk about Flowers Foods' strategy, it all seems to hinge on, well, this idea of evolving consumer demand. What are the big shifts you're seeing? How is that forcing a company like Flowers Foods to rethink everything?
Well, what's really insightful here isn't just that Flowers Foods is responding to these macro trends. I mean, pretty much every food company has to, right?
Sure.
It's how aggressively they're pivoting their core portfolio.
Yeah.
This isn't just like a marginal tweak.
Right.
It feels more like a high-stakes bet on their future. They're acknowledging that even bread, this traditional staple, isn't immune to these huge shifts in consumer values around health, wellness, and concerns about ultra-processed foods.
Ultra-processed, yeah, that's a big one now.
It is.
Yeah.
And this aggressive transition is precisely what they believe will drive that long-term growth. It's a core pillar for them.
Okay, so they're making this big bet. I'm genuinely curious then, as we look at how they're responding, what's actually working for them right now? Where are they seeing, real traction in the market?
Yeah, good question. And that's where their differentiated products really shine. Dave's Killer Bread DKB, as they often call it, and Canyon Bakehouse are the standout examples here.
Okay, TKB and Canyon Bakehouse.
Yeah. And Dave's Killer Bread is seeing these substantial space gains, especially in mass channels, for its organic products. That's more than just a sales win. It's almost like a bellwether,
How so?
Well, it signals this fundamental shift in how mainstream consumers are defining bread. They're moving, it seems, from traditional white loaves towards healthier, maybe organic options. And that forces competitors to either play catch-up or, well, risk becoming irrelevant.
So it's reshaping the market?
I think so, yeah. This isn't just acceptance, it's market reshaping. And it's a big reason why Flowers Foods maintains such strong market share, particularly in those premium and differentiated segments.
And it's not just about relying on those existing stars, right? Are we seeing genuine innovation, things coming down the pipeline that can really move the needle beyond DKB and Canyon?
Absolutely.
Yeah.
Beyond DKB, their active innovation pipeline includes some promising new products, things like smaller loaves, which seem to be a trend, and even keto offerings.
Keto bread, right.
Exactly. And then there's Wonder. The relaunch as a national brand, that's actually exceeded their expectations.
Oh, interesting. Did it hurt their other brands? Like Tasty Cake?
That's the clever part. Apparently not.
Yeah.
They managed it without cannibalizing Tasty Cake, largely because of geographic strengths. Wonder is national now, while Tasty Cake is still really strong, particularly in the mid-Atlantic.
Smart positioning.
It seems so. And yes, they're already planning more innovation for the Wonder brand itself, which tells you they see more growth potential there too.
Okay, so some definite sweet successes. But, even with those, it's probably not all smooth sailing for Flowers Foods.
No, definitely not.
Like any major industry player, there have got to be some significant challenges brewing. What did the earnings call reveal about the tougher side of things?
Well, the first hurdle, and it's a big one, is increased competitive pressure.
Yeah.
Particularly from new, lower-priced bread products hitting the shelves.
Ah, the value end.
Exactly. And this is directly impacting their traditional loaf sales. From the Q&A session on the call, we learned the promotional environment is, quote, elevated but stable.
Okay, so lots of deals, but not getting worse.
Sort of. Flowers Foods has actually increased promotions themselves, especially, interestingly, for those differentiated products like Dave's Killer Bread, which, as we said, did well.
Right.
But those lower-priced entrants are affecting the traditional loaf areas. The market, they said, remains bifurcated.
Bifurcated, meaning split.
Yeah, distinctly splitting into two.
Yes.
You've got strong performance in premium, higher-end stuff, and also in the very low-priced value segments, especially in mass retailers and club stores.
In the middle.
The traditional loaf products, sort of caught in the middle, seem to be the most affected. Flowers Foods is addressing this partly with their own small loaves, but they didn't disclose specific plans for the traditional loaf weaknesses.
Competitive reasons, I imagine.
You got it. For competitive reasons.
And it's not just competition on the shelves, is it? They also mentioned ongoing weakness in their away-from-home food service business. That impacts performance too, right? How does that translate financially?
Yeah, that weakness connects directly to the financials. They're experiencing what's called negative fixed cost leverage because of lower volumes.
Okay, break that down a bit.
Sure. In simpler terms, their fixed costs, think factory rent, equipment leases, things that don't change much with volume, are now spread over fewer units of bread being sold through food service.
Ah, so each loaf effectively costs more to make.
Exactly. It squeezes their profit margins, their gross margins specifically. And that, in turn, has led them to reduce their EPS guidance, their earnings per share outlook.
Which isn't great news for investors.
Not typically, no.
Yeah.
And it's also narrowing the gap between their dividend commitments, what they promise to pay shareholders, and their current EPS run rate, how much profit they're actually generating per share right now.
Tighter.
It is. And it's probably worth noting that Guru Focus, which is an independent financial analysis tool, has actually detected, I think it was 6, warning signs with FLO, their stock ticker. So there's some external financial scrutiny there too.
Right. Okay. So putting this all together, what does this mean for the road ahead? How are Flowers Foods trying to navigate these challenges and plan for the future? It sounds like, well, quite a long-term play.
You're right to highlight the long-term aspect,
Yeah.
and they're pretty upfront about it. This whole transition aligning with shifting consumer trends, it's expected to take time.
Patience required?
Patience required, definitely, from stakeholders. They won't put a specific duration on it, but the company seems to believe the category will stabilize eventually, driven by, these evolving consumer behaviors finally settling and maybe the last effects of the pandemic washing through.
Interesting thought.
Yeah, but their primary focus right now remains firmly on innovation. They need that innovation to replace the declines they're seeing in the traditional loaf sales.
It's almost like the classic white bread loaf is facing its own midlife crisis, isn't it?
Uh-huh. That's one way to put it. Suddenly everyone's looking for something maybe healthier, something artisanal, something different.
Exactly. So, okay, long-term view, focus on innovation. What about their specific financial strategies? How are they supporting this and keeping things stable?
Well, they gave a structural tariff update. The expectation there is actually for tariffs to decrease based on what they're observing currently.
Okay, that helps.
Could help. And regarding how they use their capital allocation, they say they maintain a balanced approach. The board evaluates performance, cash flow, and liquidity every quarter.
And the dividend, given the tighter EPS?
Yeah, they clarified that while they don't have a stated target payout ratio like a fixed percentage of earnings they pay out on a cash basis, their dividend situation looks a bit different.
How so? Cash basis versus earnings.
Right. It's because the money they set aside for depreciation and amortization, basically, accounting for the wear and tear on their assets, is actually more than what they're currently spending on new equipment or facilities, their capital expenditures or CapEx.
Ah, so that frees up more actual cash, even if reported profits are tighter.
Precisely. It gives them a bit more breathing room on a cash flow level.
Got it. So despite these headwinds, despite the need for patience, it sounds like their commitment to innovation is like the constant thread here. They're not letting up on that front.
That's absolutely correct. They reiterated they have the #1 brand in soju, that's stock keeping unit, basically a specific product in the market in some categories. And they will keep investing in brands like Nature's Own, trying to mitigate those losses from the traditional loaf declines.
Makes sense.
It's all about focusing on where the market is going, not necessarily where it's been. It kind of reminds me of how quickly coffee went from just coffee to lattes, cold brews, single origin beans.
Right, a total transformation.
Exactly. The bread aisle seemed to be experiencing its own sort of gourmet and health-conscious revolution.
So there you have it, our deep dive into Flowers Foods. It's a really fascinating look, isn't it? A major food company balancing this sustained success of its innovative premium products
The DKBs of the world.
with the significant pressure on its traditional segments, all while trying to pivot for the future for these evolving consumer tastes.
Yeah, and if we kind of connect this to the bigger picture, this deep dive really shows how even these established industry giants, these household names, have to continually adapt, innovate, and sometimes, well, play the long game to stay competitive,
Yeah.
especially in such a rapidly changing consumer landscape.
Absolutely. Which raises an important question for you listening. How quickly do you think large, established companies can truly pivot their entire business model when consumer habits shift so dramatically?
That's a tough one.
It is. And maybe what does Flowers Foods' experience here tell us about the future of traditional consumer staples more broadly?
Well,
Thing to think about.
Subscribe to my channel Report Stock.